What's up, you money makers and Senseonics Holdings shareholders? Welcome back to the channel. In this particular video, I'm going to talk about ticker symbol SENS. Many of my viewers asked me what's going on with SENS. I precisely called out SENS when it was $2.15, and we have seen such a run up to almost $4, and we are now back. So what was going on? What caused this dip? Whether you should buy the dip? One of the big news that I want to cover is Senseonics Holding is going to release the fourth quarter and full year earning for 2021 on March 1st. 2022 at 4:30 p.m., which is right after the market closing. So whether it can bring the pump back or not, what you should be looking out for if you still own Senseonics. If you're watching my previous videos and if you're watching and following this channel, you might have sold Senseonics around $3.92. We pretty much bought this stock around $2.15, and we have seen such a massive run up of almost doubling up our return on investment. So from $2 to almost $4. So doubling up the money within 2 to 3 weeks, such a massive return. Let's talk about what's going on for Senseonics Holding. In return, all I ask you is to hit that like button, subscribe to the channel, and turn on the notification bell so you don't miss out on my future videos. I put in a ton of energy, effort, and my time in building this video, hoping you can make informed financial decisions. So just help and support the channel. Your help is very much appreciated. It helps when you click the like button, it helps this video to share with more and more people based on the YouTube algorithm. So your help is very much appreciated. So hit the like button, subscribe to the channel, and turn on the notification bell. Now for 5 days, we have seen Senseonics is down 24%. For 1 month, we have seen 35% down. However, you might have seen such a run up when we saw the FDA approval, because we were pretty close to the FDA approval. Now, if you don't know what is Senseonics, I just wanted to quickly go through this particular company. They are the creator of the first and only long-term implantable CGM. Now, if you're questioning what is CGM, it's continuous glucose monitoring system. It's an ever-sense system that Senseonics has for 90 days, and they recently got an approval for 180 days. And this is not the end of the story. They're not hitting the dead wall. What they're doing is they're also working on building the product for 365 days. Now, this is the sensor or this particular device which can be on the skin or under the skin for this diabetes, the patient of diabetes, and they can send sensors to iOS and Android application, and that way it's a very easier way for both the service provider as well as the patient, and they're changing the game. They started this particular initiative in 2016 with 90-day Eversense system product. In 2018, they got this FDA approval for 90 days. So they exactly knew what they were doing that when they were asking for an approval for 180 days. I precisely called out before 2 or 3 weeks, right before when we got the FDA approval for Senseonics, and the stock skyrocketed. Last year, we were expecting actually this approval, but due to the pandemic and backlog for FDA, we did not really see the approval going through. It did not go through, and as a result, we were expecting that to happen in 2021 Q1. Around January and February. There was a little bit of more delay, but precisely it just happened in Q1, which skyrocketed the stock price that I talked about. Now, what else is going on? So this 2021 approval target timeline was actually 2022, which was one of the big catalysts we precisely talked about, which is when we bought the stock. Even though the market was down, many of us double our investment just in a couple of weeks, which is massive. Now, year to date, if you take a look, we're down 37%. For 1 year, though, we're down 62%, but there are always, once again, this is a penny stock, risk versus reward. I'm not a financial advisor, so do your own due diligence, but we have been seeing such a risky play working out pretty well throughout 2021, and we are extending that in 2022. If you want to follow this channel, please do that. Also, you can join the Patreon. It's $4.99. The link is in the description below. We talk about all the stocks. This is not a day trading channel. So if you're looking for anything around day trade, you don't want to join the channel. But if you're looking for certain catalysts that can hit 2, 3, 5, 10x in terms of ILS, we have seen 10x return for CYBL. We have seen almost 2 to 3 times return as well. And there are many other stocks in 2021, BNGO, Senseonics itself, and many other pharma stocks that we traded into. Zomedica Corp, we did 2 to 3 to 4x return just in no time. So feel free to follow the channel and make sure that you also do your own due diligence. Now, Senseonics penny stock, let's talk about what they're saying in general for the fourth quarter and full year earning, and then there is a release and conference call on March 1st. We may see some of the strong momentum in terms of the revenue. We're expecting around $12 to $15 million in revenue that they may declare because they have given us the guidance. Let's take a look. FDA approval that happened on February 11th with Eversense E3 continuous glucose monitoring system used for up to 6 months, providing they also provided us the business outlook. Now, why this is important? After they got this FDA approval, they are going to extend this technology and longevity of this particular product for 6 months, which is planned to be available within the United States through Ascensia. Now, why Ascensia? They have this tie-up with this strategic partner company called Ascensia, which is once again, it's a commercial collaboration. Now, this broad partnership features the global commercialization and financing arrangement with the leader in BGM. Ascensia is not a new company. They are in the business for last 80 years with the innovative diabetes care product. They have approximately $1 billion in sales in more than 125 companies. They're covering more than 10 million people who are their customers as well, approximately 1,700 employees working in 31 countries. So they know exactly what they're doing into the business. They're leveraging ADC commercial strength with the current and new product. Now, their focus area will be they want to focus into the select market for the reimbursement. They're going to have medical billing code as well. With the brand awareness and adoption, they're going to grow this technology and their market value and market share in more and more countries. They're only available in selected European market as well as in the United States after this FDA approval for 180-day product. 180-day product with the annual revenue that they want to bring in between 22 to 2025 is going to be between $30 million US dollars to $80 million per year. What you want to think about when you look into this particular their business and the sales pipeline, they are looking precisely to make sure that they cover more and more patients there in the realm of the diabetes and certain diabetic related resources diseases. The company expects the full 2022 global net revenue between 14 to 18 million US dollars, which is going to be amazing because the company has been selling the revenue approximately between 4 to 13.7 million for the full year 2021. So we really know that they are somewhere between 4 to 13 million. In my opinion, they would be about $10 million in revenue. If they do $18 million in revenue next year, that is going to be 80% spike in terms of the revenue that the company is booking. That also brings more and more profitability and company's momentum in terms of their market reach, so on and so forth. Now, if you take a look right here, their average volume is 13.2 million, but we have consistently seeing the higher volume. The last volume on Friday, 22.4 million. Take a look, 22.45 million, 24, 22, 31, 36, and we have seen the spike on February 11th when they announced this FDA approval for their 180-day product, 105 million in terms of the volume, which is massive volume. You want to see once again what the RSI looks like, because if you are looking for short to long to medium term, you want to see that 32 RSI suggests it's an oversold stock at the moment, which means there will be more buying happening. See the spike, we went from $3.50, we got back to $1.73, so we are cut in half. Now, when we see this revenue, we may see some spike. I'm not saying this is going to double or triple, but we may see some momentum in terms of the price point. Now, if you want to really take a look into where we need to go before we start seeing some stabilization in terms of the stock price, that price is $2.60 that we saw actually in mid-January when we did not really have any announcement around FDA. We knew that it is coming, but you want to go about $2.60, which is once again going to be a good resistance to begin with. But once we cross that price point, that is going to work as a very strong support. Looking into the moving average, we are looking at $2.70, where we are $1.73 right now. So 20, 30, 40% return could be there if they announce some of the juicy information around their profitability, around their guidance for 2022, around what they're doing in terms of 365-day products, so on and so forth. But this is not going to be double at this point. But you need to win it for a long period of time. You might not want to worry about too much, because this company is a pretty innovative company. We have seen the revenue between 3 to 4 million, as you see September 2021, the quarter ending, June 3.23 million, 29 million rather, 2.85 million in March, and last year in December we have seen close to $4 million in revenue. So all in all, I wouldn't be surprised if they are showing more than $10 million in revenue in 2021, regardless of the pandemic, regardless of the FDA approval that they did not get, and they have strong partnership once again. I just wanted to share this information with you because you may see some momentum into the stock. You may see 20 to 30 to 40% spike. Now you want to also consider a few things. One of the thing is what is happening with Russia and Ukraine situation, because it is causing so much FUD into the market, and that fear, uncertainty, and doubt that is happening at a global international level is causing some of the hiccups and turbulence into our market as well. The second thing is, in mid-March, the Fed is going to meet as well. I'm not saying it is directly connected to Senseonics or anything around, but that impacts the market sentiment. We have seen some of the red days that is impacting a ton of penny stocks, ton of OTC stocks, and ton of stocks in general, growth stocks as well. They are not behind. Take a look at Tesla. It's $850. Take a look at NIO, $20 to $23. We have seen the stocks are impacted really bad. But what you want to consider is when there will be green days, this stock will go back up to the normal levels. And you may see, and I've been covering the stocks, Tesla, NIO, you can go check my previous video as well. There is a potential that you can double your money in Tesla, relatively strong growth stock. You can double, triple your money in NIO, because fundamentally strong company. They have NIO part coming up. So you want to find out certain stocks that can do better when we see green days. And patience is the key. You don't want to really go back and worry about so much about fear, because in the long term, you know that the companies are fundamentally strong, their business is strong, their product is strong, and when everything will be settled down, the dust settles down, you will see all the stocks back into their normal levels. I hope you like this video. Hit the like button, subscribe to the channel. I will see you in the next video. Thanks for watching.